today is how to trade NVIDIA. One of the common questions that we get are one, like what stocks would you be investing in? What would you be trading in? And secondly, how could I get started with a smaller account? And those are both valid questions. And I'm going to try and tackle them together today. I'm going to take the assumption that we're starting with a small account, that you have $5,000 or less to begin trading with. Let's just say you have $5,000 and you've narrowed in on a company that you want to trade. And that company that you're going to want to be trading today is going to be NVIDIA. So, how I want to do this today is I want to show you how I want to approach investing in NVIDIA. And this is almost like a framework that you could use on any stock or on any investment that you want to get into. Before I get into it, though, I just want to say one of the very most important things you could do for building wealth long term is ask yourself this: how long can I be invested in a particular asset or into a particular investment? If you can own real estate for 20, 30 years, you'll do very well. If you can own stocks for 20, 30, 40 years, you will do very well, such as stocks like Nvidia, stocks like Apple, etc. So sometimes it's short-term trading and having some income come off those trades, but I think more importantly is what can you do for a long period of time? Can you trade stocks? Can you trade options for 10, 20, 30 years? If the answer is yes to that, likely is you're going to do very well with your investments and be able to generate wealth that you can enjoy a good life and also give off to your next of kin, such as your children. Okay, so why do I want to own NVIDIA? NVIDIA is one of the best companies you can be owning. I have loved owning a little bit of NVIDIA and trading NVIDIA for a very long time. This dates back to the 90s and the early 2000s when they were one of the best companies to be using for graphics cards or your computer. If you're gaming with Quake or Doom or any of those first person shooters, let's even do Call of Duty at the time, you wanted to have an NVIDIA chipset or a graphics card. Later on, if you got into some mining of crypto, you definitely wanted to have an NVIDIA card. You could have it for gaming, you could also have it for mining. But from an investment standpoint, it is also just as good, maybe potentially even better. This is why I want to own NVIDIA. They have a $5 trillion market cap. Just seeing that word almost seems unreal and out of this world. But yes, it is a $5 trillion company. Of course, that can oscillate day to day as the market moves. But in 2026, they are forecasted to generate $216 billion in revenue. It is astronomical. But what's even more impressive is of that $216 billion, look at the very bottom of this slide here. Their gross margin is 71%. So of the $216 billion, they get to keep 71 cents for every single dollar. After they paid for all their expenses, their net margin is 55%. They are able to retain and keep so much of that revenue. And that's because they're able to sell the best in class product that is available, whether that's for graphic processing or that is for what we all know, AI compute. Their return on equity is an astonishing 101%, and they've been able to keep this up there for a long period of time, at least over the last 2 3 years when we've been having the AI boom. And you might think they are expensive, but their forward price earnings is 25. Going forward, you're actually quite a good deal, and they continue to grow at an astronomical rate. You can see where they are getting that revenue from. Almost all of it now is coming from data center buildouts. So while they started with gaming and while they started with the Reba, the GeForce, uh, what was it after that? I mean, the last graphics card I had from them that I personally owned was the 3090 RTX. I did use that for mining, and for gaming, it was out of this world. And having 24 gigabytes of RAM on the chip was a good buffer there for doing some AI compute itself. But their revenue is supposed to grow year over year, 65% as well. This is the kind of company, this is the kind of investment you want to own. If you're able to strip out and say, hey, you know what? If I could own any one company out there in the world, which one would I want to own? While it's completely unrealistic for you to ever own NVIDIA, I think it is still a good question. If you could own any company, maybe two or three, but if you could own one company, which one would it be? I think maybe one of them that you might consider is NVIDIA. Another one maybe is Apple or some of the others that are rising up. But this is the good question that you want to be asking. And if you can say, I want to own NVIDIA, okay, now we're ready to start trading and we're ready to start investing into it. even if you are starting with just $5,000. Okay, so let's get into the tactics of how we're going to own or trade or invest in Nvidia. Now, I'm allowed to say that I'm putting it together $5,000 and I have that $5,000 capital. I have my brokerage account, I have my trading account, I have level 3 options approved for this, and it is a margin account. So, yes, technically I can borrow against it, but I don't really want to be borrowing money on Nvidia. What I want to be doing is having that ability to have a short position on Nvidia. I'm not going to be shorting Nvidia. I just want to have the ability to short, because what I am going to be doing is selling options, which is often considered a short position because I am actually -1 contract on that. And so you need to have that ability on your account. It is possible in your retirement account that they'll let you do this as well too, but having a margin account is fully enabled, level 3 options, and I have $5,000 cash. I also want one more feature with my brokerage, and that's the ability to have fractional shares, and I want 0 commission. You'll notice with Cashflow University at CFU, we never talk about fees or commission when we are doing our trading. That's very difficult because we don't know what people have for commissions. Some of them have absolutely 0. Some of them have to pay some regulatory fees, but the cents on the dollar. And some people have to pay $1 or $1.50 per contract. Most people who, if you're trading US options, you do have the capability of trading with 0 commissions. So now that I have 0 commissions, I can buy and sell the stock. I have fractional shares. That means I can go in and say, hey, I just want to buy $50 of Nvidia. I don't know what that is in terms of shares, but just divide it up and make it $50 for me. That's what I want to come in doing right out of the gate as I start to invest in and buy Nvidia. I want $50 a week putting into this. That's gonna give me roughly, so if I could do $500 a month into my position of NVIDIA, that's gonna get me about 2 shares per month, and at about current price, I'm just looking at the market price right now of NVIDIA, and that's gonna get me about 24 shares by the year end. Now, of course, I want to be adding and contributing money from my checking account, from my paychecks, and I want to be contributing to this to keep bumping it up, right? What I'm saying is you are looking at this as an investment that you could not do better than NVIDIA at growing equity, at growing cash flow, and putting in growing wealth. But when we come in and we're saying, hey, I want to invest in trade in NVIDIA because I think it's a great long-term investment, that's what we're coming in here. So I want to be putting 10, 20, $30 a month more into that account. And I want to be buying a little bit of NVIDIA every single week. This is going to give me the dollar cost average approach as I build my position in NVIDIA. My goal with this is that I want to own 100 shares of NVIDIA as quickly as possible. So let's say, for example, you get like $100 from your birthday or $100 from Christmas. Take some of that, buy some NVIDIA. We are taking the assumption that you are able to buy NVIDIA. Once you get 100 shares, now we're talking about covered calls. However, I have the constraint that I have to be working with $5,000. So let's keep on going here. Small accounts, if you are going to be trading options with NVIDIA and you have a small account, one of the downsides that you have is that you have 5,000 and 100 shares of NVIDIA are going to be about $20,000. Let's take a quick look at the NVIDIA chart from today. It's at $198. I'm going to bring it up here onto the stage. You can see it. And I'm just going to pop myself down at the corner so we can have a better view of it here. Okay. So this is NVIDIA. It's trading at $200 a share, 198, but let's just call it $200 a share. That's going to cost you $20,000 to have 100 shares. I can't play with that right now. So I need to be putting in $100, $50 or so every single week and establishing my long shares positions. That's going to be getting me half a share, 1 share, 2 shares. Yeah, it kinda sucks, I get it, but what you wanna be doing is slowly building that position. Learn about the company, read what they're doing, what are the new products? What is this Vera Rubin GPU that they've been talking about? Vera is the CPU that sits in front of the GPU, and Rubin is the GPU. They do work together, so learn about that. Why do they have to separate those 2 out? Why does the CPU have to orchestrate? What is it doing? What is it planning? And why is that GPU so powerful? And why is everyone trying to get a hold of it? And why does it only have such a short shelf life before it gets obsolete and then needs to get replaced? Very cool things to learn about, but that's not why we're here today. We're here to learn about trading and investing in NVIDIA. So, as I look at this, what I want to be doing is I want to see where would I love to buy if I could. An absolute diamond place to be buying is right down here in the 166 to 170 range. Okay. This is showing me that right here, this change of character with the stock, it broke below a previous low, but immediately it found strong support. And buyers were saying, I will buy that. That is a great deal at that price. So, this is a great support level. This is showing you strong demand on the stock, and that's why it gets shaded in here with the blue. Now, I know what you're going to ask. What indicators and what setup do you have here? I'll show you what I have. What I have here are two overlays that are very powerful. This is by LuxAlgo. And yes, these are paid AI enabled indicators that are configured here to give me buy and sell alerts and also give me change of structure and break of structure alerts as well too. However, they do have a free one and it's called Smart Money Concepts by LuxAlgo as well. And you can look for that under your indicators. We can pull that up, do LuxAlgo. I think let's do smart. I might bring it up. Yeah, so it's one of these smart money concepts by LuxAlgo. It's really good and it gives you the basics, but it won't give you the buy and sell signals. That's reserved for their paying overlay there. So that's what I use. I just have simple moving averages, and then the two Lux algos. And then I keep it as simple as possible and clean as possible. But this gives me my really good supply and demand areas, which I really rely on a lot. Now, coming out of that, that might be too low. I might not be able to get that 170 price for quite some time, but that's somewhere you might want to be selling a cash secured put or open a put credit spread. So I would love to open that one. After that, I want to be looking at the 180 room. That's going to be where my 200-day moving average is, and also more or less my 50-day moving average there. So that's number two. So 185 and 170. Okay, what I'm doing here is I'm marking off areas for a buy that I would be wanting to be buying extra shares, or where if I'm doing a dollar cost average strategy, where I would say I want to be adding shares even faster. So 170 support. I'm just using the call out feature here to put on, and then I want to go off here and just say this is 185. Okay, now what I've done here is I just put these levels here. You can also do a horizontal line if you want to. It's just the last time I used it, it was red. So you can put those on as well too if you want to mark that. But that just gives me my little notes here, and then I can come in here into OptionStrat and I can start to look. Okay, so June 18th, that's 45 days in the future. That's going to be a very good area to be selling for a put credit spread. I know it's going to be out of the money, so it's Delta 28. It could be Delta 25. That's what I was trying to target is Delta 25. If I go down to, and I'm going to go back to my grid here, 170 is what I wanted. 170, that's going to be down about the 15 Delta. So 15 Delta, and I'm just guessing, but I already kind of have a sense of what those are going to be. So that's going to get me, if I did the 170 over 165, that's going to get me $63 in credit. So that gives me some exposure right off the bat. And remember, I'm buying $50 a week worth of NVIDIA. So I can grab that and I could buy NVIDIA with that. Okay. So let's come back to our presentation that we had. So what we want to do is when we're bullish on NVIDIA, we want to be doing a put credit spread. And when we're bearish on NVIDIA, we want to be doing a call credit spread. So far, all we've looked at is the put credit spread for opening up a bullish position. We could be doing both of these. I wouldn't do them at the exact same time. That would be more of a neutral strategy or doing an iron condor. But if I wanted to say I'm bullish or I'm bearish on NVIDIA, I could open up a call credit spread for being bearish or neutral on it, or I can do a bullish put credit spread. And the bullish put credit spread is what we already covered, where I'm selling that 185 or that 170 put option, and then I'm buying just below that a hedge. Now, you don't want to be doing a cash secured put on Nvidia at this time because you don't have the cash to secure it. I know you can open up the trade, but you don't want to be doing that because if you get into trouble, you want to have that long put to secure. So when we come back here on this Nvidia, here, I'll show you what I'm looking at now. So this is when I've opened up my put credit spread, and I'm just going to try and zoom in on this. Yeah, here we go. So I've chosen June 18th and I've opened up the 170 and the 165. I'm pretty happy with that credit. And with a 15 delta, that means it has a 15% chance of ending in the money. So I got an 85% chance of it ending outside of the money. That's great. I can take that risk. And I'm going to get paid $63. My maximum loss, and this is why it's so important when you're looking at with a $5,000 trading account, is as you're slowly buying those Nvidia shares, the maximum you can lose at this point is $435, 437. Now that might seem a lot when you're looking at a $5,000 account, and I get that, but this is a very accurate trade that's going to keep you hedged. You can work with this, and if you have to, you can roll with this. Okay. Remember, this is NVIDIA, and you are looking at this as a long term investment. Okay. You are not just in this with NVIDIA for a year or two. This is something we want to be in for 2, 3, 4, 5 years. Okay. Now we can do some trades intermediate to kind of boost the return a little bit and to ride this even faster. And that's what we're doing with these option trades. If we went up to 185, I'll just show you what that was like. That was the other support area that we saw. You're going to get $132, which is fantastic. Now, how do you know if you want to be bearish and how do you know if you want to be bullish on NVIDIA? Long term, we've already indicated that we are bullish on NVIDIA, and the long term trend is very indicative of that. Remember, like when they just took off during the AI craze and they've just been beating it and smashing it and continuing to do very well. We want to continue to ride this. There's no indicator that NVIDIA will not do well into the future. Okay. Now, let me share with you how a very easy to use metric and method of determining bullish and bearish on this trade. Let's use seasonality. Okay, this is a controversial method that a lot of people like and dislike about using a measurement on stocks, and if you want to be bullish or bearish on it. However, the research on seasonality proves out that if you do trade stocks based on seasonality, you would get a 0.5 to a 1% return improvement over just holding the S&P 500. So if you just hold the S&P 500, or if you buy and sell based on seasonality in the S&P 500, you would get an additional 0.5 to 1% return. So if you extrapolate that and bring it over into individual stocks, you can also get likewise improvements. If you want to do additional research on that, you can go over to financial. I can bring that up, and they will show you some additional research on that as well too. Financial.com. I'll show you this one. This website here has a lot of research and information on seasonality under their seasonality scanner. Okay, so if you come in here, I don't have a membership with it any longer, but if you come in here, you'll be able to get a lot of information from it. Why don't I have a membership of it? Because I have this at CFU. So if you come in here under our members section, this is where we have our seasonality calculator. So you can come in here, so we can type in NVIDIA. I can pick my expiry date. I want us to do June 18th, right? No, June, what? Yeah, June 19th. Sometimes this looks weird to me. Something's wrong. Yeah, it should be June 18th. Something's wrong with the calculator. Okay, let's just go with it though. So it'll calculate the seasonality return. So what's this doing is this is going back and doing calculated year by year returns for the last 10 years. So it reaches back, in this case, it has 11 years, 12 years, sorry. back to 2014. So it pulls year by year statistics from this day. So from May 1st until June 19th over the past 12 years, this is the pattern of returns that you would get. So we have 3 years out of 12 that are negative returns. The rest are positive. And when they are positive, they are strongly positive over the short term. The prediction that we would have on this is within 80% confidence boundary that it would go up to 2020, $224 to $261. So very strong bullish indicator there on this seasonal return. Now, if we go back here to the chart, what we have here is this is the seasonal trend for Nvidia, typically speaking, for a given year. So as you're building your small portfolio of Nvidia and you're just chipping away, adding those stocks month by month, week by week, when you're coming into the month of May, this is when you want to be doing a bullish run or a put credit spread on Nvidia. Coming into the month of June, you may favor more of a neutral, or if you're going to do a put credit spread, go a little further out of the money. July and August, you still want to be using those put credit spreads. As you come into September and October, that's when you want to either hold off, don't do any trading on it, or you want to be doing a nice hedge for a bearish prediction on Nvidia. So now what happens is, why does Nvidia have this kind of rhythm or this pattern to it? And what happens is, usually what's happening is this is when they're announcing new products. This is when things are getting to market, when they're exceeding expectations, or as a case in September and October, they're probably having that realization of reality where they haven't had as good of a uptick as they wanted to, or that's kind of the time when some of their competitors are announcing new products. AMD or maybe Broadcom is announcing something that would be contrary to the interest of NVIDIA. Now, let's go here. We have a question. If you take a loss on a put credit spread for X, have you ever come across whether or not you'd still be able to continue to buy shares, or would that be a wash sale? The internet has mixed findings whether it is. I'm sorry, my man. I don't exactly get the question here. I think you might be talking about taxes. Have you ever come across whether or not you're still able to continue to buy shares, or would that be a wash sale? I think what you're asking is, are you trying to say, if I sell my shares of NVIDIA, can I use a put credit spread as a temporary holding or a temporary position, have a bit of a bullish exposure to it, and that would continue to have my exposure with NVIDIA, but then am I still able to register the sale of NVIDIA for tax loss purposes? I think where you're getting the mixed internet feelings on this or findings is that there's different tax laws in different countries and in different jurisdictions within the United States, and they may be saying, yeah, you can, or yeah, no, you can't be doing this. Where I live in Canada, so my tax laws here are very different. I know in my instance, if I sell NVIDIA for a loss and then I immediately buy a call option, that does not count as a wash sale. They count as two separate instruments and two separate trades. Although they are exposed to the same business, they don't count as the same trade and the same investment. Strange, I know, but my accountant at least has said, no, you can do that. It's two separate trades, two separate investments. The ticker symbols are different. They don't count them as the same thing. You can still register the shares that you sold at a loss to help offset gains somewhere else. But again, I'm not an accountant, and even worse, I'm a Canadian, so don't take that as any type of, if I did get that wrong, let me know and drop it in the comment there. And again, anybody else who's watching, if you have questions, want to add to it, drop them in the comments. Okay, let's keep going. Okay, our next slide that we have, just bringing that up, sell a tight PCS below the trend. And I think we already went over that a little bit when we jumped in here with the chart. And I showed you the two support levels, the 185 and the 170. You could go a little tighter. In fact, you could go right up to the money on NVIDIA if you're really bullish or you really want to have some active trading on there. I personally like to stay out and do the Delta 25 kind of sweet spot. That's my playground. That's mostly where I do my trading. And you'll see that in my trade alerts that I have with the system that we run at CFU. So very mechanical, very methodical, run the numbers, math doesn't lie kind of approach, and just keep it going. One of the really cool things we've added to our system just recently is expected value. So what we're doing now is we're doing the math down to we're using delta and we're using that to multiply against the credit or the debit that the market is demanding. And what we're finding is you can enter into a trade like a 5 width or a 2.5 width, and the expected value will be positive even after the money that you're gaining or getting credited multiplied by the probability of outcomes. So this ends up being something like a positive 10 or a positive $5. But what this helps us do is make sure that we're the house or we're the casino when we're doing our option trades. So after we run the numbers, it's like, hey, if we did this 100 times, we would still be ahead of the game. And we can use that when we're entering new trades, and we can use that while we're entering rolls in our trades. You've seen that in our trade alerts recently where we've started to calculate out earned value. We do have to use computers, AI to generate this and say, hey, what's the expected outcome on this trade? And it'll go through and it'll just chunk out the numbers, multiply it out, and give you, you're at a plus 10, you're at a plus 25. And you'd be surprised sometimes at how we backtracked and looked at some of our previous trades, how it'll actually have a negative EV or expected value out of it. And so we're correcting that, we're making changes, we're improving our system. But that is something that you can be looking at too in our trade alerts as we go forward on this. And always be the house, always be the casino, and have things working in your favor. It proved to us that option trading is not a zero sum game. Over time, if you continue to trade with earned value, you will continue to earn value and have expected outcomes work to your favor. Same trade, same payoff, zero assignment risk. This is something that you definitely want to take into consideration when you're trading put credit spreads or call credit spreads, especially when you have a small account size. If you're doing NVIDIA and you have a $2,000 account size, you really want to be taking assignment risk to heart. Assignment risk is when you sold this 190 put on NVIDIA and the holder of that put assigns you this 100 shares of NVIDIA, you are going to have to pay $19,000 to buy 100 shares of NVIDIA. You're going to wake up in the morning and you're going to have an event on your hands. You need to handle this immediately. This is why that 185 put becomes so valuable for you, because you can use that 185 put, that long hedge for you to help sell the shares and get really good price, because there's a chance that Nvidia at that time is below 185. You need that 185 to help you hedge and get $18,500 for those 100 shares. Because if Nvidia fell off a cliff, and it can happen, let me show you this beauty fall off the cliff. Don't know if you guys saw this in the last week or so, but shares of what is this? Avis Budget Group was nothing like a budget. This week they had a very fun little experience where they had a short squeeze. There were two different hedge funds that had shorted the snot out of Avis Car Rental Group. And when they started to have some good news with the TSA, when they started having lockouts and long lines, and people were like, forget this, I'm not waiting around, I'll rent a car. When fuel prices started to go up and flights started getting expensive, people started to rent cars more. And bam, they had a short squeeze on their hands. And once it broke above the 211 mark, we had a nice Eiffel Tower. And the two hedge funds that were owned essentially 13% of the float made it go up to a $8,850. So if you're in this position, just look at this. If you had been selling covered calls or call credit spreads, or had, for heaven forbid, a naked call on this position, and you're getting paid 25, 50, $75, and then it rockets up like this would break your account. If you were short like the 200 call option for, I don't know, like today in May, you just got rocketed. Okay, so you're gonna have a big problem. This is why you want to have that hedge, especially when you have a small account. And then bang, it come right back down just as fast. So don't take things for granted. Okay, if you have a small account, you want to be having those long puts, long calls to hedge. Okay, so this is why you want to have those. And another thing too, so if you don't want to have assignment, you're like, that's a scary situation. I am extremely risk averse. I don't want to be doing that. What you can do instead is enter into a call debit spread that's in the money. Now, you're going to say that doesn't make any sense. I've never heard of that. This can't be the case. Actually, it is the case. If you look at the call debit spread for the exact same trade, you'll see that more or less it's going to have the exact same numbers. So the 185, 190 call debit spread, which you're buying the 185 call and you're selling the 190 call, would have roughly the same outcomes for profit and loss. And with this, you have no risk of assignment. Now, it says never on the assignment risk here. That's not truly the case. You are short the 190 call. However, if you are assigned the 190 call, you automatically have access to the 185 call because that's what you bought. And you can buy shares at 185 and sell them at 190. So it's actually extremely good for you. You get maximum profit out of that scenario. If you want to look at the numbers real quick with me, I'll show you that they are exactly the same. Here we go. So let's come over here where we've got our Nvidia put credit spread. This is for June 18. But yeah, let's go hardcore on it. So we're going to short the 190 and we're going to buy the 185. That's going to give me a 162 net credit, and my max loss is 337. My max profit is 162.50. What I'm going to show you is if you did this flip and you win a call debit spread, you'll have the exact same or more or less the same max loss and max profit. Let's do it. Bullish call debit spread, June 18. We're doing the 185 long. Yeah, and we're doing the 190 short. See, it's almost identical. So you're going to pay 327. Actually, let's do them both at the same time. So we're 185.90, so 190, 185 for the put. So our maximum profit that we can have is 165, and on the 185, 190, our maximum profit is 172.50. So you're actually going to get more money on this, just a few dollars more. And you do have to put up the initial capital for that, but you have no assignment risk with this. Okay. So if you are risk averse when it comes to assignment, you want to avoid that. That's your answer right there. Just start doing bull call debit spreads instead. Okay. Gives you the exact same exposure, exact same profit and loss, and it removes assignment risk for you. Okay, so before you get into those, you probably want to do a little bit more homework on that and just kind of run the numbers yourself, do some experiments, do some paper trading, and you'll see that it's just about the same every time you look at it. Okay, so let's get back into it. So you might want to be doing that. That's a good way for you to enhance your outcomes. You'd be getting a max profit of 155 on this, and that gives you, you have to wait until the trade clears, but that gives you 3 weeks of buying Nvidia shares. Awesome. Okay, rolling. So you want to be doing rolling. So when you win, you want to close out at a good profit. I don't think you should be going all the way and waiting for these option trades to expire in the money or expire out of the money. I do like to get out of those positions once you've hit 80% of the total profit that you can realize for that given trade. Okay, once you've gotten into that range and you're like, hey, you know what? I'm waiting for the last dime. I'm waiting for the last nickel. Stop doing that. Get out, close the trade. You're going to avoid gamma risk. If you want to learn more about gamma risk, that's what you're exposed to when you're waiting for that last nickel and that last dime. So research gamma risk. That is what you're exposed to. That's what you get to avoid when you close out earlier for that 50% or that 80% profit. Rolling is a very intelligent way for you to continue to roll down and out or up and out your position with the options. And this allows you to continue to bring in credit, bring in and burn theta. Theta is time decay. As the options decay in price, you're able to monetize that and put that into your account. After you've made some money, use those to buy more Nvidia shares. Or say you want to diversify a little bit outside of that, go outside and buy some more elsewhere. But I think Nvidia is a great long-term investment. You should be exposing yourself to the risks and the opportunities that come with Nvidia. Don't give up. Continue to do this. Like we started off at the very beginning of today's webinar, you want to be doing investing for a long term. You never want to be giving up. You know how they always say successful people never stop learning? Wealthy people never stop investing. Keep on investing and keep on dollar cost averaging and building a substantial portfolio. 4 tools, the whole stack. Okay, you wanna know what you can do? First thing, TradingView. I already showed you TradingView. That's a great tool for charting. It's the gold standard. Traders across the world use it. You're not gonna find a better tool. If you do find a better tool for charting and graphing, please let me know. Drop it in the CFU Discord or drop it in the comments here on YouTube. Caveat, it does legitimately have to be better than TradingView. Number 2, OptionStrat.com. That's a great tool for you to visualize your option trade. I already showed it to you today. That's where you have your sliders. You're able to pick your positions and do what you want to do with it. Number 2, CNBC. I know it stands for CNBS. I get it. I know. But for just doing quick summary on the company that you're researching, you just want to know their price earnings ratio, any news that's coming up related to that company. It's a good place to go to get that. There's other sources as well too, Yahoo Finance, etc. But I do like just to go to CNBC. They got great aftermarket and pre-market updates on the stocks that you're looking at. They got a really good, easy to use app that you can just pop on your phone. But in terms of like, yeah, like the news slant and the articles, and they have some bias on there, I totally get it. And I don't listen to them for that. I just go there for, hey, I just want to know what the pre-market's doing on Nvidia. Is there any news? Are the earnings coming out? Also, too, you can get a lot of that numbers from TradingView, and also TradingView has the earnings calendar that's on there too, on visualize at the very bottom. Last but not least, your broker. You got to have some place in order to buy and sell options and buy and sell shares. Okay. Oh, and if you want to track and journal your trades, which you always should be doing, you can go over to cfubook.com. Let me show you that real quick. CFUbook.com. Now look at this. It also has the ad for today's YouTube webinar. Isn't that amazing? I know it's very narrow, but was done on purpose actually, because this is mobile oriented first. What this is going to allow you to track all of your trades, very easy to enter into. So I can come in here and I can go plus, I'm going to add a new trade. I'm going to do Nvidia. It brings up my ticker, it shows me the current price, and this is live. It's tapped right into the market. I come in here. I want to do, we got to do a put credit spread. Yeah. So we're June 18th. Okay. And then we're going to go down to we're going to do the 185, right? And then I'm going to buy the 170. Oh, I want to do the 180. Yeah, 180, 5 wide. Bill price. See, this is the cool thing. It goes to the market for me. It grabs the price. It calculates the mid price for me. And all I got to do is use these adjusters here to just go up and down. Maybe I got 135 for it. We can just hit that, or I can go up, or I can go down, or I can type it in. But either the way, I just click that. It gives me a review, 135 credit. It's going to give me a max loss of 365. Estimated probability of profit, 27%. Click that, review it real quick. Yep. Hit that, save the trade. It's in my portfolio. It's already being tracked for me. So it's nice, quick, and easy. And it already has features such as I can roll it, I can close it, I can indicate that I got assigned, I can add a note to it. It allows me to have my journaling for me. I have my portfolio here of all my positions. I see what's coming due today. So I have my ARM PCS, and I also have my performance tracking. And this shows me what's working for me, my behavior leaks, and it also gives me a cold streak and what my account value is. And then down here, it also shows me what CFU's performance is. So I can compare myself to CFU. So CFU's win rate right now is 98%, an average return per trade of 10%. My return per trade is 29%. This is just a test. So don't take this like legitimate, but it also has like nice tool tips and everything. Gives you a full breakdown on everything and how it's going for you. The cool thing is it's totally free. You can go over here, sign up, start using it. You can use your Google account. You don't even have to be a CFU member to use this tool. If you are a CFU member, it links directly into your account with CFU and you get couple of extra features for it. But it's fully functional for anyone. So if you're looking for a trading tool to help you track your trades, CFU Book will do it for you. Just go over to cfubook.com, log in, and you're off to the races. And you get a weekly reminder of the upcoming webinar that you can hang out with me on a Friday afternoon. Okay, so there we are. And that's all she wrote for today, guys. If you are interested in becoming a member of CFU, Cashflow University, head on over to joincfu.com. You can start for free. You can get accustomed to the way we operate and the way we work. We have live trade alerts. We have an interesting and awesome and vibrant Discord community. Of course, our trade alerts are reserved for paying members. So if you're not a paying member, you won't get any of our glorious trade alerts. But you will get access to our webinars. You get access to our free tool set. And we also do have some scanners for you as well, too, where we'll go and scan the market and give some option trades for you as well, too. If you have any questions, drop them in the Discord, drop them in the comments channel here in YouTube, and we'll get to them when we can as quick as possible. I promise. Okay. Awesome, guys. Thanks for being with me today, and we'll talk to you later. Ciao, everyone.